No long intro. Now, for this week's weekly trading review and lessons, we have a very interesting one. Now, for me, I've been struggling with this for a few years now, and it wasn't until this recent week I figured out exactly why. So I think for most of you guys listening, you might find this specific lesson very beneficial. Now, in ICT's most recent trading video, more specifically the 2016-2017 ICT mentorship, the core content videos for month 8, he put out a video talking about London protraction. And what really got my attention was the London delayed protraction. Now, for some of you, you may be very familiar with the idea that, assuming you have the correct bias, on a classic sell day, you would expect the markets to start rallying exactly at midnight New York open, and you would be looking for shorts. That's your basic form of the Judas swing. So very elementary level stuff, right? And of course, that works really well. One of my favorite setups, and one of the main reasons why I really enjoy trading London session. One of the main ones is because usually if I have the correct bias, let's say if my bias is bearish throughout Monday through Wednesday, I typically expect price to rally from 12 a.m. to 2 a.m. In doing so, price automatically clears out the buy side liquidity. Now, that helps a lot because it helps me actually visualize where the setup is going. And usually that rally from 12 a.m. to 2 a.m. is usually a fake. So most times a lot of traders might get caught in it by trading with the trend, which on a 5-minute chart isn't so bright. Of course, on a daily, weekly chart, monthly chart, that's great. But if we're talking about the sub 15-minute charts, trading with the trend, at least for me personally, isn't my cup of tea. So that setup would make it very easy for me. And of course, it's only valid from Monday through Wednesday, where you expect price from 12 a.m. to 2 a.m. to go the complete opposite of where your bias is. And that's your classic accumulation phase. So assuming your bias is bearish and you're correct, the markets rally from 12 to 2 a.m., collecting lots of orders, clearing out buy stops, and waiting till usually around 3:30, 4:30-ish to start making the initial move. So a lot of people get faked out in this. And I have one of my buddies who also trades, and he used to fall for this a lot. And I had to actually tell him that. I had to tell him you kind of have to wait, because usually those early on setups throughout the London session don't usually pan out like you want to. They tend to be a fake. And that's only valid, which is very important for you guys to understand, is through Monday and Wednesday. So Monday, Tuesday, and Wednesday. Now, what I found to be very challenging was the fact that sometimes the markets did not rally from 12 a.m. to 2 a.m. They would just sell off exactly at 12 a.m. And my bias would be correct. And I would just not get an entry because I wasn't comfortable trading at lower prices. And one of the things I've mentioned to you guys is the idea that for me personally, if I'm selling if I'm going short on any particular asset class, I want to be shorting above New York midnight open. That's a very binary thing for me. It's either it's there or it's not. I'm not taking the trade. And you guys will see this eventually. The more I post some of my trades, the more you guys will realize how seriously I take that rule. One of my favorite rules. It eliminates a lot of the bad trades that I used to take in the past, and of course, I miss out on a few a few other trades, which is completely fine. Now, the issue is when the markets initially sell off from 12 a.m., I could never find myself, at least I could never feel comfortable enough to even enter a position anymore because I always assumed, it never felt easy for me. There's always a sense of unease that the markets can go right back up and clear out buy side. I always want to see buy side cleared out first. Only then do I fully feel confident in my trade idea. Now, I'll play you guys a video from the mentorship month 8, which is daily profiles. And I hope this helps, and we'll talk about it right after. So bear with me here.
The directional bias is going to be bearish, but the protractionary stage is going to be delayed in the day. In other words, we're not going to see the rally right after midnight in New York time. It may just erode and go lower right after midnight. IPTA will enter a protractionary stage at or shortly after 2 a.m. New York. So what you're going to be doing is you have a vertical line on your 15-minute time frame, and you're looking for price to stage a rally at or just shortly after 2 a.m. That rally is going to be a intraday inside the range that's already existing, or inside the high that's already formed for the day. It's going to be creating a smaller little Judas swing. It's going to rally up from 2 o'clock and making your London entry come to fruition.
Now, let's take a quick pause here and talk about what he just said. Now, one of the things for me personally, I found to be very difficult to take a setup like that. Even though I was very familiar with your classic mitigation block, even the bearish order block, not order block, but bearish breaker, I could never get myself to take, let's say, a trade like this. Now, when we look at this is a crude depiction of of the markets. Of course, you guys can make sense of this. Look at this. We have a high here, lower high, and that is this red line specifically is delineating the New York midnight open. And you see price immediately starts to sell off. Now, for me, this has always been an issue because although I may be very confident in my bias that the markets were likely to head lower, I could never get myself to take a position like this. So oftentimes I would be up during London just staring at the charts and being so frustrated that these markets are trading lower. Well, I know it was likely to trade lower, but I didn't have the courage to even take a trade like this because I simply didn't understand what was going on, which oddly enough is true, or was true until a couple days ago. Now I understand exactly why. Now, the reason why for me personally was because of the fact that throughout the years, the classic setup during London for me has usually been at 12 a.m. if the market starts trading lower, taking out sell side and usually taking out the Asian range lows as well. That usually sets place for a buy day. So inversely, what is said for the sell day. So when I see the markets taking out sell side while leaving buy stops up here, I can't help but think that the markets will immediately or sometimes in the future reach for these buy stops. So for me, the logical thing has always been, well, you better not sell short in here. No matter how clean of a mitigation block this may look to you, or perhaps there might be a fair value gap in here. Oftentimes it's an order block in here. I could never get myself to do it because the way I saw price action has always been sell side, buy side. Now, at the end of this video, I see mentioned something that is very important, and I'll let you guys hear it, but keep that in mind. When you see this lower high here, classic low resistance liquidity. So I never felt comfortable, no matter how good my bias was and how confident I was in it. I could never feel comfortable enough to go short in here, simply for the fact that buy side still remained. So I always feared that the markets will likely wake up here, and take out the buy side liquidity while stopping me out. So of course, I did the safest thing and just wait for the markets to trade lower and cry about it. Of course, not literally, but those are usually my most frustrating nights. You know, you wake up in the middle of the night to trade London session, you have the correct bias, and yet the markets does this. And this has happened to me more times than you guys can count. Oftentimes this happens. It's more like a 50-50 scenario. I love when the markets take out the buy side liquidity from 12 to 2 a.m., but sometimes it doesn't. And I would miss really good moves because of it, because I could never understand how can I possibly trade this. Now, let's listen to the rest of the video.
You're going to be looking for an intraday premium PD array to short on inside that retracement. Now, again, that retracement is going to occur at or just after 2 a.m. When do you look for that? When the market does not create that 12 a.m. New York time rally. In other words, the price does not go into a protractionary stage higher after midnight. It just rolls over, goes soft, and just makes a progressively lower move going into 2 a.m. Not a problem. Draw a vertical line at 2 a.m. Wait for a retracement higher. That will be IPTA's protractionary stage. It will not want to make a higher high. And
Keyword, and I don't know about you guys, but I do tend to pay a lot of attention to some of the most minute details, especially in speech, and most especially of someone like ICT, who I personally respect and love the concepts. Now, he said, let me play this back.
not want to make a higher high and retracement higher. That will be IPTA's protractionary stage. It will not want to make a higher high.
It will not want to make a higher high. Now that's very important. When I first heard this in the video, it dawned on me. Like, because guys, believe it or not, this has happened to me many times, and it is one of the most frustrating things ever. To wake up early, no, my bed feels very comfortable. So to wake up early, take the time and get to work, have the correct bias, mark up my charts, and do everything in my power. And yet to see the markets trade lower, while I know it's likely to happen, and still doesn't have enough confidence to take the setup. I said it will not trade higher. Now, I take that to heart, and from my experience, it often doesn't. Most times, it actually doesn't trade higher, but because of the way I understood price action, I could never let myself go and actually be able to take those certain setups. And the thing I figured out is I didn't understand that this small retracement was IPTA's protractionary period. This one was the protractionary period. Usually, I'm very accustomed to the protractionary period where the markets simply trade higher. That's the protractionary period. That's the one I've been accustomed to. But I never understood if the market sold off and at 2 a.m. or just after 2 a.m., I never knew to expect the markets to retrace higher. I never knew that. I really never did. I never understood that. So now I understand, okay, at 2 a.m. or just after 2 a.m., to expect the markets to retrace higher, which will be considered the protractionary period for IPTA, is delayed. Hence the title, London Delayed Protraction. Now, I'm very used to your normal protraction where the markets simply trade higher and take out buy stops. I never knew that it could happen later on. So whenever I would see this, even if it came in form of an optimal trade entry, or it can even be a perfect, let's say, optimal trade entry inside of fair value gap, and there's an order block nearby, and there's a mitigation block, all these four PD arrays could have lined up perfectly, and I still would not take that trade. Simply for the fact that I'm not comfortable with it. I'm really not. So, knowing this helps tremendously. And I'll show you guys an example that happened a day after I actually watched this core content video. A setup just like that showed itself. And guess what? I fumbled the bag. I still wasn't confident enough to take that setup. So until I've watched this specific video a dozen times already, just to make sure I understood exactly what ICT was saying. Because this has been what you would call my arch enemy or my nemesis. I'm not exactly sure how you would refer to this, but this has been one of my biggest issues. I've missed dozens of trades, and we're talking about 100 pip moves that I outlined. I take screenshots beforehand, and then I would see the markets melt down without me. So let's finish the video very quickly.
And price will go to a premium PD array, bearish order block, close a fair value gap or liquidity void, and then you'll be selling short on the day. And again, the primary premise is you already have to have a bearish outlook. The daily is respecting resistance ideas, and it should be seeking sell side liquidity. If you have this criteria, this is the London delayed protractionary profile that you look to trade off of. But the key is having that 2 o'clock time frame. There must be a rally up at or just after 2 a.m. trading up into a premium PD array in the time frame you're trading on, which is the 50.
Now, I do certainly hope this video helped some of you that may or may not have gone through this. Now, let's look at the actual example I went through a day after watching this video. Now, here is a 5 minute, I believe a 4 minute chart actually, for the euro dollar. Now, this whole range right here has been the Asian range, and this blue line right here is delineating the central bank dealers range. Not sure if you guys are familiar with that. This is the actual range, and this is my not sure how, I forgot how you would refer to this. Casting this into the future, I was anticipating the London high to be up here inside this hourly bearish order block, and as price starts to trade lower, this is 2 a.m. So price starts to trade lower quite a bit, and this line right here is delineating the midnight New York open. So midnight New York open. So classically, I love to see price trade higher. And notice here, we have buy side liquidity in form of relative equal highs. This is one of my favorite setups to see. Whenever I see relative equal highs, I get a smile in my face because I understand that the algorithm is very likely going to draw into that pocket of price action. So seeing this and having the midnight open, I was very confident that these markets are going to trade higher, take out buy side, trade into this bearish order block, and I'm going to sell short. This was my setup, and I'm currently taking a 100K FTMO challenge, and I was excited to take this setup. I mean, this was going to be my one shot, one kill for the week. And look what price does. Trades higher, fails to take out this high, and decides to trade lower right at 2 a.m. It does so by creating a displacement, leaving this fair value gap here, and price starts to trade lower and lower. And right about here, I was already upset with myself because I understood very well. I simply don't want to take this trade. I saw this fair value gap, and I definitely saw this one, but I had no interest. I missed my setup. Price did not take buy side. So what am I supposed to do? I never felt comfortable enough to take a setup like that. So I let price do what it wants to do. And as I saw price trading lower, I was thinking, can this possibly be the London delayed protraction at play here? And as I watched price trade higher, I marked this fair value gap, and I was sitting and just thinking, man, if this actually does trade lower, I don't know what I would do with myself. And guess what? It did. It did. And this thing sold off for over 100 pips, which doesn't mean much really to me. Most of my trades always usually end up doing something like that. But seeing this right after watching the video was one of those eye-opening moments. Look at this thing continued to sell off even during New York session afterwards. And let's say, guys, one of the reasons why I never feel comfortable taking a setup like this is because usually I would think that it means that my bias is incorrect. So my bias is wrong. Because in your classic London Open, if you see the markets trade lower, taking out sell side liquidity, usually that means this is an accumulation phase. So the markets are accumulating, collecting orders, and you would expect displacement higher, leaving a fair value gap, and price to retrace into it and going higher. So me seeing those three highs, those relative equal highs, I simply cannot let myself go short in here. I just can't, knowing that the markets are likely to take this out. So I can, and this actually itself was a potential 5 pip stop loss. But I still couldn't do it because time and time again, I've seen the markets just take out relative equal highs so violently and quickly. And whenever I see this setup where the markets would trade lower instead of higher on my classic sell day, I always assume that the markets are in a classic buy day because of it. But now I don't anymore because I understand that this is simply a delayed London protraction. It's delayed. Remember, I still mentioned that at 2 a.m. or just after 2 a.m. to expect the markets to retrace into a premium. Now, this order block in here is a premium. This fair value gap's a premium. Look what price did. It trades into it and sold off. And now I'm not frustrated like I usually am when those setups would happen because now I understand how to fix it. It's been rare for the past 9 to 12 months now for me to have my bias wrong. So I always fear that if my bias is wrong, then this is a classic buy day. But I've proven to myself that my bias is very on point at this point in my trading career. I remember maybe 2 years ago where I had this obsession with determining the daily bias. And along the way, I figured it out, but I never paid attention to it. It's one of those things. Once you have it, you don't necessarily worry about it. And now I understand that my bias usually is right, but because the markets aren't as set in stone as I'd like them to be, certain setups won't be as clear cut. The markets won't necessarily take out buy stops while trading into the hourly bearish order block and sell off like I'd like them to. it may show me something different, like a delayed London protraction. Now, I've been victim to this so many times, and I wish you guys could understand this, but I do hope none of you fall victim to this anymore, because I'll put a link to the video, the core content video from ICT's mentorship. That way you guys can watch this for yourselves, so you guys don't fall victim to this, because I've missed so many trades. I mean, so many trades throughout the years, because I was always fearful of taking a trade like this, because it didn't give me what I was originally thought. Now, I hope this video certainly helps you guys. And let's go back to our mind map. This is the name of the actual video itself. So if you guys ever want to type that in onto your YouTube search bar, that will show up. And for the week, I'll show you guys how many trades I took. Absolutely none. You can look here. These are all the setups from last week. These are the losers that we discussed last week. And this is the winner. Look at this. Nothing. And all these are limits I had set up. And they never triggered anything. They never went live. So it's non-farm payroll. So I took absolutely 0 trades. And the only trade I could have taken is that one. And of course, you know what happened. I didn't. But now, this is one big lesson for me. Like, this has been one of the things that killed me in my trading. And I'll be very frustrated oftentimes during New York session, because I missed London session, the best possible move, even though I had the correct bias, simply because I couldn't understand this. Now, this is something I'll remember forever, is the London delayed protraction. And I do hope this video has been beneficial to you guys, and I hope you guys have a blessed day and good trading.